When it comes to Greece and the euro crisis, there is always a deadline. Banks and hedge funds have until Thursday, 8 p.m. London time, to decide whether to take a big loss on the Greek debt they hold and swap it for new debt. Those banks and hedge funds are deciding if they should voluntarily take a 53% nominal loss on their holdings. In reality, many are losing more than 75% of the value of the Greek debt that they hold. But that's, of course, considered better than getting nothing. We already know that many banks have agreed to the swap. Some big banks, including Deutsche Bank, Allianz, and BNP Paribas, have said they will take part in this swap. Now, Greece was hoping to have 90% or more of their bonds swapped. Now, that seems unlikely. There are holdouts. Greece said Tuesday that those who don't sign up should not expect Greece, in the end, to pay them back in full. So lawsuits are sure to follow this process. Now, if less than 90% of the bonds are offered for this swap, then Greece has the right to force the remainder to take this deal, like it or not. That's what's called a collective action clause, or CAC. If it falls below 75%, Greece says the offer will be revoked. Now, that would create market havoc because this offer needs to go ahead for Greece to get its massive $160 billion bailout. Ideally, this swap will cut Greece's $230 billion debt by half or more. That would save it some $4 billion a year that otherwise would have been spent on debt repayments that can instead go to help rebuilding the economy. Jim Bolden, CNN, London.